Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and with me as always is my co-anchor Snehi Shah, and over the next 1 hour we take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Snehi, we've got to take a look at the US markets there.
Absolutely, and the handover looking rather weak, Shreyansi, when you take a look at the US markets. Hi there, good morning. Let's take a look at what Wall Street did in yesterday's trade, and stock futures rose slightly in overnight trading yesterday as traders await an all-important policy speech from Fed Chair Jerome Powell today for any guidance of the future rate cuts. Now, remember, the Fed Chairman is set to speak today from the central bank's annual conclave in Jackson Hole, Wyoming. Is expected to signal it's appropriate for the central bank to begin lowering interest rates soon, with limited clues about the magnitude and frequency of the reductions. But nonetheless, all eyes are going to be on this speech today for lots of clues about any rate cuts, their trajectory, their stance on inflation, and a whole lot of other commentary that will be coming out from this Jackson Hole meeting. Remember, today Bank of England governor is also all set to speak in this meeting, and on Thursday, which is yesterday, in the run-up to the Jackson Hole speech, stocks were pressured by a surge in treasury yields. The S&P 500 fell almost 1%. Nasdaq has declined 1.7%, suffering its worst day since the 5th of August, and the blue chip Dow lost 177 points as well. So while handover is looking to be rather weak when you take a look at the US markets, and well, yes, S&P 500 also 1% lower, Dow 0.5% lower is where it has ended the day. Markets are betting on a 0.25 percentage point cut at the September 17-18 meeting and leaving open about 1 in 4 chance for a 0.5 percentage point reduction. Basically 25% of the economists polled, and the street is actually expecting a 0.5% rate cut. This is according to CME Group's Fed Watch tool, and minutes from the July session showed a vast majority of members in favor of a September cut, remember. But when you take a look at all of these three indices from a weekly basis, the Dow and the S&P 500 are still up modestly this week. However, Nasdaq is down 0.1% week to date, poised to post its 5th negative week in 6. So basically, that is what the handover is looking like. We did speak about treasury yields. Let's take a look at what US 10-year is up to as of now, and 3.841. They rose slightly as traders were awaiting these remarks coming in from Jackson Hole today. But as of now, trading with very nominal cut. But well, yes, 3.843 is where the US bond is as of now, the 10-year treasury yield. But with that, let's also take a look at the European markets quickly. DAX is shut with an uptick of 0.2%. FTSE rather flat, but a 4-point uptick coming in, so in the green nonetheless. And Stock 600 also 0.3% higher. So largely, this is what the US handover is looking like. But Shreyansi, you do tell us what's happening with crude and gold as well.
Well, absolutely, and it's a very interesting picture that we're seeing shape up, Snehi, for both oil as well as gold. Firstly, let's take a look at US crude oil, because US crude oil rose to $73 per barrel after raising most of its gains for the year, as soft demand in China as well as worries about the US economy weighed on the market. So that's the kind of concern that we've seen emerging in the market, and that has largely been in the spotlight. Now, the US benchmark is now up about 2% for the year despite all of this. While when you take a look at global benchmark Brent crude as well, that has erased virtually all of its gains for 2024, like I mentioned. Now, the benchmarks are down 15.7% as well as 14.8% respectively from April highs, which was when Israel and Iran nearly went to war as well. Now, when you take a look at the close coming in on Wednesday, oil prices settled more than 1% lower after US job growth was revised significantly lower, renewing those concerns about the strength of the world's largest economy. And those have been the concerns that have been in the spotlight. When you take a look at price movements, then you're looking at WTI October contract around those $73 per barrel levels, uptick of about 1.5% coming in there as well. Year to date, when you take a look at the contract, that has gained 1.9%. Let's also take a look at Brent and see the moves that we've seen there as well, because that was around $77 per barrel, uptick of about 1.5% coming in for that one. When you take a look at the year to date movement as well, the global benchmark is marginally up about 0.2% thereabouts. So those are the kind of moves that we've seen coming in for both WTI as well as Brent. Let's also take a quick look at gold then, because gold prices fell more than 1%, pressured by a rebound in the dollar as well as higher treasury yields, something that Snehi also mentioned while traders looked forward to Federal Reserve Chair Jerome Powell's speech for more cues on rate cuts. And that, Snehi, has largely been the cue of the week when it comes to global cues, right? But then when you take a look at spot gold movements, then spot gold was down about 1.2% and around those $2,400 per ounce levels, and that was after hitting a record high of $2,531 per ounce as well. When you take a look at the dollar index as well, you are seeing an uptick coming in of about half a percent thereabout against its rivals after data showed that US jobless claims rose more than expected last week as well. But it's really the precious metals pack that is largely under pressure. So whether you look at a silver down about 2.3%, platinum downtick of 1.9% coming in there as well, and palladium as well lost 2.8%. So that largely is the kind of handover that is shaping up in terms of both oil as well as the precious metal space.
Okay, so well, that's everything that's been happening in terms of equities as well as commodities. But let's look forward to a new day, and these are all the cues that you need to be keeping on your radar in today's trade. First of all, not much happening in India in terms of macroeconomic movement. But when you take a look at US, lots of important stuff happening. The Fed's balance sheet is going to be released today, and like we told you, lots of action expected at Jackson Hole as well. Shifting focus to the UK, you have consumer confidence data coming in, and from the Japan, you have the very important CPI data that will be coming out any minute now. So watch out for that as well. And in terms of corporate action and board meetings back home, you have Jindal saw that stock is going to be in focus because the board is going to be meeting to mull a stock split today. So watch out for any announcement on that front. And it's also the record date for the Mayur Uniquota share buyback today. Now in terms of the primary markets, you have Orient Technology IPO that will be closing for subscription today. It's the last day to apply to that IPO if you wish to do so. And in terms of other events, some important geopolitical developments in fact coming in for India, because PM Narendra Modi is going to be visiting Ukraine today. On the other hand, you have Defense Minister Rajnath Singh. He is going to be visiting the US from today till the 26th of August. And well, you also have Bank of England Governor Andrew Bailey, who's going to be speaking at Jackson Hole, like I told you earlier. So that commentary is also going to be crucial to watch out for. But well, yes, that's all the important cues to watch out for in today's trade.
Well, absolutely. And with that, let's kickstart this Friday morning with looking at some more global news and updates then. And unemployment benefits rose slightly last week but are stabilizing at a level suggesting a gradual cooling of the labor market. The jobless claims rose by 4,000 to a seasonally adjusted 232,000 for the week. On the other hand, US business activity hits a 4-month low this month as firms continue to grapple with the challenges of passing on higher costs to consumers.
Well, some commentary coming in from Fed officials. You have a Boston Fed President Susan Collins. She said it will soon be appropriate for the Fed to begin rate cut cycle. She added that quite a lot of reduction is seen in happening in inflation and bringing more rate cut confidence as well. Meanwhile, Philadelphia Federal Reserve President Patrick Harker also advocated for a rate cut in September. He says that Fed should ease methodically and signal well in advance.
Alright, moving on then, Japan's key prices rose 2.7% year-on-year in July, slightly up from 2.6% in June, matching expectations as well. Headline CPI inflation increased to 2.8%, though still below the Bank of Japan's 2% target. The persistent core inflation suggests that BOJ might consider further rate hikes as well. And Governor Yuda is also set to address the monetary policy outlook at an upcoming special hearing following a recent global market rout.
Alright, on that note, as of now, Nikkei is slightly pressured in trade, 0.1% lower coming in. So you have that Japan inflation data also out. But let's shift focus to the auto space. And BMW has emerged as the leader in the European battery EV market for the first time, surpassing US automaker Tesla. BMW sold over 14,800 BEV cars in July, edging out Tesla by approximately 300 units. And according to reports, BMW has reported a 35% increase in sales last month compared to a year earlier, while Tesla saw its registrations drop by 16%.
All right, moving on then, and let's take a look at the quick commerce space because that has been in the spotlight. Competition is heating up in the quick commerce space. Consumers are preferring quick delivery, and the startups like Zepto, Swiggy, Zomato, and many more scaling up their businesses. Let's take a look at the special report that ET Now's Aishwarya Patil filed. Take a look.
Zepto and Blinkit have become household names in cities, but the promise of quick delivery is too tempting for bigger players to ignore. And there are sound business reasons for it. Quick commerce is expected to grow at more than 27% annually over the next 4 years. And the user base is expected to reach to about 56 million by 2028. In fact, the big boys of the industry might be playing catch-up in the instant delivery space at the moment, but competition is definitely heating up. Reliance Retail is planning to roll out instant delivery across 1,000 cities through JioMart. Flipkart's new offering, Flipkart Minutes, on the other hand, is doling out discounts and has plans for 100 dark stores in the festive season. But new entrants will certainly have to make a quick dash to take on the established players. Swiggy Instamart has an active user base of 30 million and has presence in more than 24 cities. Blinkit and Big Basket now have already reached more than 30 cities each. What's more? Well, Swiggy Instamart has close to 500 dark stores and Zepto hopes to have 750 stores by 2025, while Blinkit, on the other hand, plans to have about 2,000 stores by 2026. So the race to your doorstep is on, but it seems players with deeper pockets will ultimately win in the long run.
Alright, that's an interesting report to watch out for. But on that note, we're going to slip into a very short breather on this edition of Market Cafe. When we return from the break, we'll take a look at how the Asian markets have opened up this morning and how those indices are faring. So you stay tuned. Hi there, welcome back. Still watching Market Cafe on ET Now. Let's take a look at how the Asian markets have opened up this morning, and looking largely weak and largely in the red is where Asia is as of now, awaiting key comments coming in from Jackson Hole today. But first of all, let's take a look at what Nikkei is up to, and 0.2% lower in trade as of now. This is on the back of inflation data that we did see coming in. Headline inflation hasn't changed on a month-on-month basis, but core inflation has nominally ticked up, but it was largely in line with what the street was expecting. But nonetheless, on the back of that, you have Nikkei slightly under pressure, 100-point cut coming in on that index. Moving on, let's take a look at what Australia is up to this morning. ASX 200 also almost 0.4% in pressure today. So rather weak start for ASX also this morning. Kospi also 0.5% lower. So while these markets seem to be working in tandem with each other, because largely Asia is looking weak as of now, let's quickly also take a look at what Hang Seng and Shanghai are up to, and if we're seeing some kind of respite coming over here. Well, not for Hang Seng at least, because Hang Seng too 0.5% lower in trade. And lastly, let's pull up Shanghai, and Shanghai in fact nominally flat, but not as lower in trade as its other Asian peers. So well, yes, some respite being seen on Shanghai bucking the trend actually, but overall you have Asia markets trading lower by anywhere between 2/10 to 0.5% cut coming in this morning. But when you shift focus and talk about what we did back home yesterday, Nifty shut shop at 24,811, so above the 24,800 mark, and you have implied open indicating a start for us at 24,838. So nominally a 30-point uptick coming in for us this morning, at least on the spot basis. So not much, flat start is what is indicated for us. And on the futures also, you just have a 2-point uptick coming in. So rather subdued is how we're expected to start today's trade, Shreyansi.
Welcome back. Thank you so much for staying tuned in. Well, the RBI has released minutes of the August policy where the MPC voted 4-2 for maintaining status quo. Now, the minutes revealed that the RBI governor and 3 other MPC members focused on reaching inflation targets, whereas external members, Jayant Verma as well as Ashima Goyal, highlighted that high rates are stifling economic growth as well. My colleague Ankur Mishra is standing by with more details. Ankur?
Yes, the details of Monetary Policy Committee meeting is out, and this time the point of discussion has been inflation, growth dynamics, as well as the debate on real interest rate. Reserve Bank of India Governor Shaktikanta Das has said that when durable disinflation to target is still work in progress, the issue of equilibrium natural interest rate is premature. Any justification for policy easing based on so-called high interest rates, the high real rates, can be misleading as per Reserve Bank of India Governor. Best contribution that monetary policy can make for sustainable growth is to maintain price stability. Now, countering this view, Jayant Verma has said that majority of the MPC is, in my view, too sanguine about the warning signals of growth slowing down. A reduction of 50 basis point has been suggested by him within a short span of time. However, he says that at this juncture, it is not, it will be premature for full 50 basis cut. Therefore, he has voted for 25 basis point cut in the current policy. Another external member has favored inflation over any other thing. He says at this juncture it is necessary to maintain the priority on achieving inflation target objectives. Similarly, external member Ashima Goel has also maintained that a 25 basis point cut should be there in the current policy, and even if growth is high, it has to rise to its full potential as per Ashima Goel. Apart from that, RBI Deputy Governor Michael Patra has said that MPC of RBI has committed to align inflation durably to the target, and therefore he has voted for status quo. Rajiv Ranjan has said that we cannot let down our guard against inflation at this juncture when supply shocks are proving to be persistent. Remember, Reserve Bank of India Governor has also said that RBI is keeping an eye on bringing down inflation towards a target on a sustainable basis.
All right, Ankur, thanks so much for taking us to that MPC minutes. But let's also understand what the street is making out of these MPC minutes. You have a note coming in from Morgan Stanley this morning where they say that inflation concerns have dominated the MPC minutes, and they're saying that price stability remains at the center stage amid resilient domestic growth conditions as well. Now, the most important line that they've said is they expect rates to remain steady at 6.5% in forecast horizon as well. In addition to this, the August MPC also marks the end of the term of 3 external members, and to that extent, the October meeting will be key to watch out for views of the incoming new members. So that is one key factor that they're penciling out this morning. But well, yes, they're expecting rates to remain steady at 6.5% in the near future at least, and that's Morgan Stanley's view and what they're making of these MPC minutes that we did see coming in.
Well, absolutely. And let's move on to some more news and updates. Then the economic growth momentum is intact, and that is as per July economic survey released by the government. Now, the survey further highlights a robust growth in the indirect taxes as well as bank credit. My colleague Prakash Priyadarshi is standing by with more details. Prakash, over to you.
The Finance Ministry's monthly economic survey has mentioned a lot of important factors related to the Indian economy. If you look at the positive indicators of the Indian economy during month of July, the report says that India's economic momentum remains intact. Despite erratic monsoon, reservoirs have been replenished. In fact, manufacturing and services sectors are expanding. Tax collections, especially GST collections, are growing with a rapid pace, and so is bank credit. Inflation is moderating, which is a very significant development coming in a given circumstances. Exports of both goods and services are doing better than they did last year. There is a positive sentiment in the stock market. Stock markets are holding on to their levels. Foreign direct investment is looking up, and gross inflows are rising. When it comes to forex reserves, which has reached at a historical level of $675 billion, which is sufficient to cover 11.6 months of imports. So these are the positive development, positive indicators of the Indian economy during month of July. But yes, there are some challenges as well, as the report has taken reference from the RBI's surveys, especially RBI's consumer confidence survey, industrial outlook survey, and household survey as well. And it has mentioned that the both consumer survey and industrial surveys need to be monitored very carefully for future trends.
All right, but we also decoded this July's economic review with Devendra Pant, the chief economist at India Ratings. Listen into what he said.
the base effect is playing its role. Come October or so, the inflation will again start trending upward. RBI's own assessment is third quarter and fourth quarter going beyond 4 and touching somewhere around 4.5. Food is still a concern. We had the wheat export ban, atta export ban, everything, but the wheat prices are not coming down in the economy. And precisely that is the reason that RBI is very careful about taking any future monetary policy action now until unless they say the inflation staying around 4% for a slightly longer time.
All right, moving on then, the government may soon come up with the second phase of the regional connectivity scheme UDAN that aims to connect tier 2 and 3 cities. Aviation Ministry is working to finalize the modalities of UDAN 2.0. My colleague Sameer Dikshit is standing by with more details. Sameer, tell us a little more about this UDAN 2.0 and all of the plans that they have as well.
Aviation Ministry is actively considering to bring the second phase of regional connectivity scheme, or popularly known as UDAN Yojana. Aviation Minister Ram Naidu has said that seeking the popularity and the success of UDAN Yojana's first phase, now the government is considering, and the discussion has already started. They have taken steps towards finalizing the modalities of the second phase of UDAN Yojana, and they want to bring the second phase so that the push for connecting smaller cities to metro cities, this push continues and the success further grows. So UDAN Yojana, or the regional connectivity scheme, was launched in the year 2016 by then NDA government, and then it was the primary purpose was that this scheme will help to connect smaller cities, tier 2 or tier 3 cities, with the metro cities through the air route. And as per the scheme, the airlines will be provided financial support in terms of VGF, the viability gap funding. So far, more than 500 routes have been allocated, and as of now, more than 100 routes have sustained by more than 3 years. So there is definitely some sort of success ratio, and seeking that sort of response, now government is considering to bring the second phase of UDAN Yojana, which will commence from year 2026 if government brings in, and the second phase is also likely to be for another 10 years. So that's the major development, and now government has already started taking steps in this direction.
All right, thanks so much for that, Sameer. But let's also go across and listen into what the Aviation Minister Ram Naidu said about UDAN 2.0.
In the coming days, we want to see a successful network of seaplanes operating in this country. For that, in the coming month, if not September, in October at least, we are going to have one demo plane in this country, and we are going to connect some important points in this country. It could be dams, or it could be lakes, or it could be the sea coast, or it could be the islands, it could be the northeast. So we are preparing one network where we take the plane around and we show the people of this country, especially the state governments also, on what potential seaplane network could unlock in this country.
There you have it. So that's the word coming in from the Aviation Minister about UDAN 2.0. Moving on then, there may be no major changes to the new public sector enterprise policy despite the changes in the divestment structure, and this is according to our sources. Now the government will continue to prioritize value addition as well as asset creation in PSUs. In fact, my colleague Prakash Priyadarshi is joining in with the exclusive details. Prakash?
Yes, we are learning from our sources that the government will continue to move forward with the new public sector enterprise policy. We are given to understand that major tweaks are likely in new PSE policy despite change in disinvestment strategy. As you are aware that the government has adopted calibrated disinvestment strategy where disinvestment transactions will be taken forward based on market conditions. But the sources are informing that the existing PSE policy provides flexibility in timings of disinvestment. Therefore, no major amendments needed in existing PSE policy despite change in stance. A very significant development coming in. In fact, value addition and asset creation in PSUs will be given a priority. Sources are also informing that the PSUs are in better position now on back of multiple structural reforms. Core and non-core assets of almost all PSUs have been identified, and priority will be given to the listing of non-core assets of PSUs.
All right, let's move on from that. Thank you so much, Prakash, for that. But let's talk about some comments that came in by Piyush Goyal that have been in focus. Now, Commerce Minister Piyush Goyal spoke further as a follow-up of his comments on e-commerce. He shared how a new policy for e-commerce is underway, and he scaled back on highlighting the negative aspects of e-commerce growth in the country. Also said that the government is not against e-commerce but supports proper regulation. Listen in to what we got from that chat.
Can we see after that was meant that the new retail policy, the e-commerce policy will see the light of the
Yes, we are hoping to come out with these policies soon. That we want to encourage online. We are in favor of online trade. We are desirous that the FDI policy on e-commerce, which allows B2B in a marketplace model, is followed scrupulously by all foreign e-commerce companies, sticking to the law of the land. We want to ensure that our consumers get choice, business practices are honest and within the law of the land.
All right, there you have it. So that's Commerce Minister Piyush Goyal clearing the air on the e-commerce policy. But with that, let's take a quick break. When we come back, we'll take a look at some more stock-specific news, so you don't go anywhere.
Hi there, welcome back. Thanks so much for staying tuned to Market Cafe. You're watching ET now. Let's take it across to my colleague Ansh, who's waiting by with a snapshot of what the FNO action could look like today, what FIIs did in trade yesterday, and the crucial levels to watch out for on the index. Ansh.
Well, market looks very positive because if you see Nifty, after giving a breakout from the 24,400 mark, has been in a very strong uptrend. It has been advancing from last 6 consecutive sessions, and we are just around 270 points away from that record high level. Whereas if we talk about index futures, then here also we are seeing positivity because open interest has gone down by around 1.5%, indicating short covering, which is a positive sign. If we talk about option front, then we are seeing some call buying happening at the psychological mark of 25,000, indicating option traders are expecting Nifty to go above this level. Now, if you talk about Nifty Bank, then Nifty Bank has slightly come out of that consolidation pattern, though we saw some false breakout on Tuesday as well. So we need to wait for one more session for confirmation if we are staying above that consolidation level or not. Though this support comes to around a 50,700 mark. If we talk about index future, then we are seeing that open interest has gone down by around 2.8%, indicating short covering, which is also positive sign similar to Nifty. Now, if we talk about index options, then we are seeing some put writing happening at 51,000 psychological mark. Currently, Nifty Bank is slightly below this. Option traders are expecting Nifty Bank to go above this level and sustain there. If we talk about few FNO stocks that are in focus, then we are seeing significant long build-up happening in JK Cement, Interglobe Aviation and M&M Financial. So keep an eye on the stocks.
All right, absolutely, Ansh. We'll keep an eye on all of those counters that you just mentioned. But keeping it going with stocks, then we have Riya who's standing by with the list of stocks that we should watch out for in trade today as well.
Yes, good morning. So there are a lot of stocks in news today. First up, we have Shriram Finance, which has approved the proposal for sale of the company's entire stake in Shriram Housing Finance Limited to Mango Crest Investment. There's also AIA Engineering, which has put forth a public announcement for the buyback of 10 lakh shares of rupees 5,000 per share, amounting to rupees 500 crores. Let's also talk about Akram Drugs. They have commenced their second production facility on the 22nd of August for manufacturing of eye and ear drops, injectable and infusions dosage forms at the manufacturing unit located in Uttarakhand. Let's also talk about Bharat Forge, which has approved the additional investment in KPTL, which is Kalyani Powertrain, for 105 crores, and the investment is going to conclude before the 30th of September. So KPTL deals in the EV and e-mobility solutions, and the company will continue to hold 100% stake in KPTL. Let's move on though to Ambuja Cement. So the promoter called Holder in Investments is likely to sell 2.84% stake in the company, and as of the 30th of June 2024, they held 70.33% stake in the company. The issue price is likely to be rupees 600 per share, which is a 5% discount to the current market price, and the block deal size is estimated to be rupees 4,198 crores. We also have PDS Limited, for which the QIP opens, and lastly Zomato is also in focus. After 2 years after its launch, Zomato Legends, which is the intercity food delivery service of the company, is going to shut down with immediate effect, citing a lack of product market fit. So that is something that we're watching out for as well.
Thanks so much for joining us and summing up all the stocks which will be important to watch out for in today's trade. But let's also talk about one more stock that will be on everyone's radar today, and that is Dr. Lal Dr. Lal stocks, pardon me. This is on the back of their management meet. Vinny is joining us with the note that Citi has discussed this morning. Vinny, summing up the key takeaways, so take us through that.
Absolutely. So interesting key takeaways that we're seeing when they met with Citi. The management highlighted certain points that, overall the mix of the company that started seeing an improvement. They're seeing an increased contribution that is coming from Swasthfit, which is the test packages, as well as in terms of the testing of specialized as well as high-end tests. That's seeing an improvement in terms of the contribution, and that will also help in terms of improving the per patient realization. Other than that, the company said that it doesn't have an intention of taking any price hikes in the near term. So yes, that's something that we're watching out for. Increased penetration is what they're talking about, especially in tier 3, tier 4 cities. Core markets is obviously something that they will be focusing on, the north and the east market, but tier 3, tier 4 cities, that's going to be working out well for them. Increasing the channel penetration, acceptability of more doctors, as well as increased patients affordability for Swasthfit is something that will be driving the growth in this segment. Other than that, they believe that the company is going to be seeing good volume growth. They expect that industry volume growth to start seeing an improvement. And a key highlight coming in where we've seen increase in terms of competition, where there was an irrationality in terms of pricing. Now they're saying that the discounting, the deep discounting, the promotions in terms of pricing over there, that's narrowing down. So yes, keeping an eye out on Dr. Lal surely. Some interesting key takeaways and highlights coming in from Citi in terms of the management meet.
Okay, Vinny, thanks so much for joining us in the studio this morning and summing up what the management meet key takeaways were and why Dr. Lal will be in focus today. But with that, let's shift focus, talk about yet another stock that will be in focus, and that is Nykaa. Remember, yesterday Nykaa was a little subdued in trade, but day before yesterday, very stellar run-up coming in intraday for Nykaa, and we've spotted some interesting trend coming in on the marketing spends when it comes to Nykaa. Q1 saw a 60 bips rise in marketing spend. The management has said that the marketing expense will most likely be between that 8.5 to 9% range, and marketing and advertising expenses has gradually increased on a year-on-year basis since Q2 FY23. Now, if I take a look at this sequentially, obviously because of factors like seasonality and all of those sequential factors coming into play, you've not seen a difference on the QOQ basis, but when you compare these marketing spends on a year-on-year basis, an interesting trend is being noticed, because even if you compare Q2 FY23 and FY24, or you take a look at Q4 FY23 compared to a Q4 FY24, there has been a hike in the percentage that the marketing spends contribute towards the net sales value, and marketing support revenues have also grown 44% on a year-on-year basis in Q1 of FY25, which is a big key positive coming in as well. Quickly to sum up what Q1 performance for Nykaa looked like, revenue was up 23%, PAT was up more than 2.5%, and EBITDA was also up 30% on a year-on-year basis. Nykaa increased existing majority stake in Dot & Key from 51% to 90%, also picked a majority stake in Earth Rhythm. But today you also have one more trigger on the back of which Nykaa will be in focus. You have reports indicating, and agencies telling us that a holder is offering to sell up to 40.9 million shares via a block deal, and from reports we understand that this is businessman Harinder Pal Singh Banga and his wife likely to sell a 1.4% stake worth 809 crores in Nykaa via block deals today, and this represents a 5.9% discount to Thursday's closing price because the floor price has been set at 198 rupees. Remember, Harinder Pal was an early investor in Nykaa and held a 6.4% stake. So watch out for Nykaa on the back of this block deal that's expected to come through today.
Well, absolutely, and we'll definitely be watching out for Nykaa, but there are a host of stocks that we should keep an eye on account of brokerage notes, and we have Varun who's standing by with that list. Varun, good morning. Which are the ones that make it to brokerage radar this morning then?
Good morning. So let me start with Reliance Industries. Bernstein has come out with a report with an outperform call, and they have increased the price target from 3190 to 3440. Now the reason for the price, the hike in target is basically they are telling that the higher valuation of Reliance Jio following the recent price hike is one of the reasons why they have raised the price. Other than that, next week, if you know, there is Reliance AGM, and they say in the AGM they would focus on potential listing of Reliance Retail. The timelines for commencement of new energy project would also be another focus, and they are increasing. They think that in next 3 years, Reliance would deliver 16% revenue CAGR and 20% EBITDA CAGR. Other than this, you have UBS and TVS Motors, and they have raised their price target from 3,000 to 3,200. They say that the new Jupiter is a significant upgrade over the old models and peers at a similar price, and they believe that the new Jupiter can add around 15 to 20,000 additional volumes, which is around 7 to 5% of the domestic volumes of TVS Motors. Other than that, they expect some new launches in EV two-wheelers and foray into EV three-wheeler category, which would further add to the volumes. Citi has come out with reports on real estate. First one is DLF. They are maintaining a sell call, but they have increased their price target from 702 to 790. They say that there is healthy demand, but the valuations are expensive. On Shobha, they are maintaining a sell with a price target increased from 1479 to 1600. On Phoenix Mills, they have given a buy call. Price target has increased from 3885 to 4040. They have increased their FY25 to 26 earnings by 2 to 4%. On Oberoi Realty, they have a neutral call. Price target has been increased from 1649 to 1840. They say that the valuation a bit expensive, but the pre-sales growth would be good. And on Prestige, they are giving a buy call with a price target hike from 1841 to 2020.
Varun, thanks so much for joining us, giving us a sum up of what the brokerages are flagging off for us this morning. So all of those stocks, and especially the real estate sector that Citi has come out with so many notes on this morning, will be the one to focus on. But on that note, we're completely timed out on this edition of Market Cafe. But while we bid you goodbye, you stay tuned to the channel because the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.